All right, welcome everybody to the Wednesday edition of the Investing Systems Trading Service Swing Trading Show. I'm Bill McKinley and I am here solo today. Jeffrey's got some projects he's working on, and so we're going to take a look at some of the open positions. We'll look at a couple of the closed positions. We'll take a look around and talk about some different things. So let's get started here real quick. I wanted to review something we talked about last week, which is how we close open trades ahead of earnings, which only makes sense, right? I mean, you see these crazy price moves when the earnings are released, up, down. And so what we're doing is that any open trades that are in the system, we use the opening price of the day that they're releasing earnings. So tonight after the bell, you got Facebook and CVI that are releasing earnings, and so they will get closed using today's opening price. If a stock was coming out, and there's some of these coming up, but there's some stocks that come out with earnings before the bell. So just suppose that a stock was coming out with earnings tomorrow morning before the open. It would appear on this list here the previous day, and then we would also use today's opening price to close it out. So it makes more sense to use the opening price than to try and use like today's close. That way, basically anybody has all day to get out, and so just for to keep everything real nice and consistent, we use the opening price to close it. So Facebook getting closed today, CVI getting closed today, and then there's a little bit of a lull based on the open trades right now. And then on Monday, there's a whole slew. I think there's like 6 of the open trades right now. If they don't get closed prior to Monday, right? I mean, there's still a couple more days. Then there's about 6 more of the open trades that will get closed on Monday morning, which is, and this whole thing is kind of cool because honestly, it's like I guess you could consider it sort of like refreshing everything, right? Sort of starting off fresh by closing all the the open trades that are coming out with earnings ahead of the earnings. First of all, we don't get any big surprises, any big shocks, 20% down moves or gaps down or whatever. And of course, there's the occasional. I saw one, as a matter of fact, I saw one the other day that we closed ahead of earnings. We'll take a look at that. It was EDU, right? So EDU got closed ahead of earnings here at the open on, I believe it was this Monday, and you can see the earnings reaction there, right? So, but the thing about it is for every one of these, there tends to be a couple in the opposite direction, and you just don't know. It's just a crapshoot, right? And the other thing is, a lot of times you'll get a huge gap up, and you'll get the opposite reaction where it gaps up and then just spends the rest of the day going down, and so just too much noise. And the idea here is that we're using like sort of a real rational, systematic technique to swing trade the cycles, and so there's no reason to introduce the randomness of an earnings reaction, right, into the system. So this CVI, which is basically, I've marked it here, it's getting closed at today's open ahead of earnings. This is probably one of the better examples right now of just sort of how everything's supposed to work when it works out. You can see way back here, the beginning of June, it triggered. This was the particular day that it triggered. So it closed on 6-4 over the trigger line. Not too significantly, but a little bit. And so the next day, this would basically be the entry zone, and you can sort of think of it as an entry zone. As we've said many times here on the show, you're not sweating the nickels and dimes and quarters on these things because when they work, they work. And so there's a couple of ways, and you can decide how you want to take the entries, but I wouldn't sweat the entries so much because generally speaking, what happens is they either work or they don't work, and so a little bit of, getting in a little bit higher than the trigger. And like Jeffrey likes to say, the trigger is basically sort of the barrier, right? Like the price needs to work its way over that. I guess you'd call it like a resistance zone in order to go on and make a significant move. And so, as we talked about last week, there's a couple different ways of doing it. You can set a good till canceled limit order at the exact trigger price, in which case you would have gotten filled, the following day or the next day, and quite frankly, it traded at the trigger price for, a week here. Or you could have just pulled the trigger right at the open the following day since it was above the trigger. And so yeah, this one didn't really look like it was going to do a whole lot, you know, initially, and then you can see that it took off and hit the target fairly quickly within a few weeks, towards I guess the third week of June. And this is a pretty amazing chart because you generally don't find a persistent uptrend like this. And that's one of that's one of the smoother sort of like a 45-degree angle uptrend, and you don't typically find that. Stocks are a lot choppier than that, but so this is a beauty. I mean, this is one for the books here. And anyway, this is going to get closed ahead of earnings. Normally, like I always mention, no matter what a stock that whether it hits the target, whether it tags one of the parabolic stops, like it did tag this parabolic stop last week, but the only way that the system actually closes it, besides ahead of the earnings release, is when it actually touches the trailing stop, the T stop. So a lot of times you'll see a stock that goes well beyond the target or makes a good move, and then of course falls back down and eventually tags the trailing stop. And every stock is going to sort of stay open as long as possible with that trailing stop moving up. That's why we call them dynamic trailing stops, until eventually the trailing stop is going to get tagged. So it'll be an interesting one to see what the earnings reaction looks like tomorrow, even though it'll get moved to the closed list tonight, just because, I mean, it's just an absolutely tremendous move there. So as of last night, let me see. As of last night, you're talking about a 20% gain there. So, and then the other one that seems to be in the news today is Facebook. And so, interestingly enough, Facebook is getting closed ahead of earnings this morning on that gap down open. So still a respectable gain there, right? Like Facebook was one of those interesting ones that sort of triggered in, and then all of a sudden, within a couple of days of triggering in, it made a big move, straight to the target. And so you can see the progression of the trailing stops here. There's another one. Okay, so those are the two that are getting closed. This one's kind of interesting. This RGEN triggered back over here. This is an example of one that if you actually set a limit order at the trigger price, you would have never gotten filled, right? The following day, closed above the trigger. Following day, it opens up here. And so, I mean, it's a viable strategy to set a limit order at the exact trigger price. And after a few days, something like this, it's clear that you weren't going to get filled at the trigger. You just move on to the next one. And so that's actually, it's one way that if there's a lot of stocks that are triggering in, that's one way that you can kind of pare down the list. So we've talked about that. There's some pretty good documentation about what we call stock selection, right? And so with the market sort of having a little pullback here, let me go to the SPX real quick. Pull that up. This little dip that we've seen here, starting to come off of it, obviously, but we did see a little dip over the past week or so, and that has that's sort of meant that a lot of the stocks that are on the pending list haven't triggered in, and so it's been real sort of tame, which is actually good. The idea of it is that you want to see, or well, we'd like to see, one or two, maybe three or four a week triggering in, and sometimes it's going to be more than that. We've had days in the past where we've had like, 4 or 5 different stocks all triggering in. And so that's where looking at the chart comes in, looking at the chart pattern and or deciding, setting some of your own parameters. Like maybe you don't trade stocks that are that are over $50 a share, in which case you wouldn't have traded this one or Facebook, right? Maybe you like the lower price stocks. Let's see, LSCC. This is a good example of an open trade here that was kind of reasonably priced, lower price stock, and so that's one of the things that you can use. The other thing is that you can look at when they're on the. Let me just go to it here. When a stock is on the pending trades list, you'll notice that it shows an average range here, right? And so, these stocks that have like a 2.1% average range, which is, let's take CBS for instance, right? It's kind of a slow moving stock. And so it sort of depends on, it looks like it's got some pretty decent cyclical action, but see, when you look at the chart, over the years, I've always talked about the scale, right? And so you could have two charts that look like this, and one moves in like a 5% range, and you can see the increments here, just 25 cents, right? And so this thing only moves a couple of percent average per day. Actually looks kind of good here. This is, occasionally we see these stocks that have real nice sort of cyclical moves, and so this is one that tends to cycle up and down pretty well. And you can see that over here. And so, now that we've had a pretty decent pullback, if we catch an up cycle, it can slowly sort of grind its way back up here. But it's a lot tamer than, say, let's see, let's find let's just look at TGTX. TGTX. By the way, we've decided to make a couple of exceptions for stocks under 10 and just kind of experiment with that a little bit. And so you're not going to see a whole bunch of stocks under 10 show up in here, but we're going to make a couple of little exceptions here. So this TGTX, let's see, the trigger price right now is 805, and so it doesn't look like a trigger on this is imminent. But what will happen is, and this probably started off up here, and so this will sort of, on the pending list, the trigger price kind of floats with the price, and it will continue to sort of float down, and then at some point, I mean, unless it just like the bottom drops out here, at some point, if it starts to turn back up, then it may meet the trigger price at a much lower price than the current trigger. So that's sort of the way that it's designed, right? And there's other stocks that are in the wings. They're just not showing on the pending list right now because of the particular setup. So anyway, let's move back to what we were doing here. So yeah, so we had a couple of stocks that triggered today. Let's take a look at them. GDI, just for the fun of it. So there you go. GDI. Trigger price 33.60, which is where I have this horizontal zone here, and I mark it as like sort of a zone as opposed to a line, so it's much easier to see. And so there you go. On Monday, it poked above the trigger, but it didn't close above the trigger, right? Closed below the trigger, and so yesterday it actually closed above the trigger. So sometimes I like to put a little arrow there just to kind of indicate which bar triggered. And so the idea is, and this is kind of interesting because the idea is that the following day, as long as the stock is trading above the trigger price, then that's your entry, right? And so it happened to gap down a little bit this morning, and so there you go. I mean, you could have basically got in, if you like this one or whatever, real close to the trigger. So, and here's the target I have marked up here, 35.20. Seems pretty reasonable. This is actually kind of an interesting pattern. This is a good looking chart right here, right? You get a stock that has a big gap up, and I don't know, that may have been earnings. It looks kind of like earnings, right? And let me just check real quick and see. Earnings on GDI are on 7/31. There you go. So that's next Monday. So basically, and that's going to happen. I mean, that's just one of the sort of the things about earnings season is that literally, every single company is going to release earnings. So, and this particular stock can move relatively quickly, right? You see like a few, you see a few places on here where literally there was like a 3 day surge. There was like a 3, 4 day drop. A lot of consolidation starting to move up, and so just because there's only well, there's today, and then there's 1, 2, 3, 4 more trading days before the earnings are going to come out. And so let me just look at something. Yeah, so 7:31 after the close, right? So basically, this day, which 7:30 July 31st, this day it's going to get closed at the opening price no matter where it is. And ideally, we'd like to see it move towards the target, but kind of based on what I see here in the history, there's actually ample time for it to move towards the target, right? And the other thing I wanted to mention, and you probably noticed this, is how quickly the stops come up. I mean, just because this is the initial stop right here, after the close tonight, that stop could easily come up to around, I'd say 32.75, 32.80, and then the following day the stop's going to come up some more. I mean, as long as the price makes a move. So the dynamic trailing stops are actually a function of price and time. And so I think that you'll probably now here's the thing. I mean, pretty good looking chart, not a whole lot of time ahead of earnings. So you could choose to say, well, I don't just want to get into this thing and then sell it next Monday. So, but hey, we'll keep an eye on it. The other one was Key Corp, right? So this is a really interesting one because if I'm not mistaken, I'm pretty sure that, and let me verify this over here on my other screen, my Thinkorswim. Yeah, so KeyCorp came out with earnings on 7/23 before the market, which was yesterday. So they released earnings yesterday, and it's one of those things, like I was about to say, where during earnings season, some stocks will actually trigger in based on earnings. Um, we had one that it was Snap. I wanted to look at that. Snap was on the pending list. The trigger was somewhere around here, and we decided like when I saw it come out with earnings last night, the gap was just too much. So certain discretion there. Obviously, it could have gapped up here. So here's the thing: is like if Snap was if Snap had a trigger price like right there, you get a gap open like that, you really don't want to jump in. So we basically used a little bit of discretion and ditched it off of the triggered today list, right? It only makes sense. So I mean, this is like some of them do this. They gap up like this, and then they make a big move. So I mean, the target could have theoretically been below today's low too. So it wouldn't really made a whole lot of sense. So sometimes have to use some discretion, and that's sort of where earnings season can throw a monkey wrench into things too, right? I mean, look at how nice this chart is. It just had like the perfect sort of pullback and was beginning to turn up, and so it would have been like sort of the perfect stock to cycle back up, just like it's been doing, except for earnings sort of threw a monkey wrench into the chart pattern there. So, but that'll happen, and there'll be plenty more. So, let's see. AMD, of course, is real popular stock, and this is a good example of how the dynamic trailing stops really are really accurate, right? because you can see the progression of the trailing stops, and then as the stock sort of pulled back here, that stop went just under. Well, actually, it was the stop would have been like just under that low, it looks like. And then here it is, lo and behold, it's turned back around. So that's kind of amazing, actually. AMD's an interesting case because it ran right up to the target very quickly. Right after it triggered, it ran up to the target. And so the tough thing, I wouldn't say tough, but the decision that you have to make on something like this is like whether you want to sell it at the target, if it goes above the target, whether you want to protect, all of the position at the target. Generally speaking, we say that selling half of it at the target is a pretty good idea. So you can see if we go to just go to the open trades here real quick. And I always like to hit the open trades, and you'll see if you sort them by percent gain, a lot of times you'll see the ones that have barely like the lowest percent gains generally are ones that are just now getting open, or have just opened, and the ones with the largest gains have been open for quite some time, generally speaking. And so, the idea behind that, you've heard the old saying, cut your losers short and let your winners run. And so the system is doing that automatically based on the idea that as long as the stock is running higher, then it stays open, right? And then occasionally there are some there's some stocks that trigger in, and they just don't get any follow through, and they look like they're about to turn higher, and then they just sort of fizzle out and turn back around and keep going down, and so they get cut out really quickly. And that's why the full stop outs are kind of rare now. Honestly, it's we've seen maybe a couple recently where it actually hit the initial stop, but the way that the dynamic trailing stops work is that they generally start moving up within a day or two of the stock triggering in. And so even if you see a stock that looks like the initial stop is really far away, what you'll see if you actually use the calculators page is that every stock that triggers, the initial stop is less than the target, right? The target price is always a bigger percentage away than the initial stop, even though they don't start off necessarily at, like, you hear like you want a 2-to-1 risk reward or a 3-to-1 risk reward or whatever. But the sort of the nature of the way that we're doing it is that doesn't really matter, because that initial stop is almost never going to get tagged and or stay there, even if the stock tends to move down a little bit, right? So anyhow, so there you go. CVI and Facebook, two of the ones that have been open for quite some time, right? CVI's been open since the beginning of June. Facebook's been open over a month now, and so this RGEN, this is one that has been doing really good, and it's triggered back over here, ran up pretty quickly, and has just been basically drifting higher. And so the stop right now is up here at 85. So this is another kind of interesting one, because right here at this point, this is where it could have. This was sort of the do or die time on this, right? So it could have failed. It could have failed and dropped right here. And once it sort of got to like this support area, it blasted off. And so the following day, that stop got moved up to over here. So this one's still going pretty strong, looking good. Let's see what else is on here. LSCC. Let's take a look at that one. Semiconductors have been pretty strong here lately, right? We've seen a few semis on the list. We got AMD and this LSCC, and I believe there's another semi-related stock on the list here, but Yeah, some of these I don't necessarily mark every single stop on there. For one thing, a lot of times, they go up. Since this is trading in quarter increments, if the stop moved up, 15 cents or 20 cents or whatever, on a lot of these, I will just take whatever I have marked as the current stop and just sort of slide it up and remark it. So this the current stop here is far enough away from this sort of intermediate stop that I decided to go ahead and move it up. This is actually, this is a great sort of example of what you want to see is you want to see the trailing stop get past the target, right? Because then, in theory, you've locked in part of the position, half of it at the target. And then if you want to, you can just, when you see that parabolic stop kick in, you can just close out the second half of it, right? And that's another, I hate to use the word discretion, but the idea is that the system itself is that everything's being calculated and it's all, based on the chart and that type of thing. But the cool thing about it is that you have the flexibility to say, well, anytime I see a parabolic stop kick in, that's where I'm going to, that's what I'm going to use to bail out. Or, some people that if you had a large enough position, you could you could use a strategy that said, okay, I'm going to sell a third at the target. I'm going to protect the another third of the position at a parabolic stop, and then I'm going to let the last third ride with the actual system trailing stop, right? So this stock could potentially, consolidate here and then take a whole nother leg up and keep going. And this thing could be open for, well until they release earnings. So, what I was gonna show you is that if you look at the trigger price and you look at the target, if the target price is above the trigger on the open trades table, then that means that you've hit the target, right? And so as you kind of go down this, you'll see that lately more and more of these stocks, and of course I got them sorted by the gains, but you start getting down here, and I mean literally, you've got to there's a trigger price, the target. I'm trying to get down to the spot where okay, so here we go, 25. Well, that one's there's the trigger price, there's the target price. So oh, I'm sorry. I'm sorry. I'm looking at the wrong column here. The close price, yeah. So what you want to compare is the close to the target. Yeah, still on my second cup of coffee here this morning, so and of course that's not really going to tell you like the price could have gone through the target and then come back down, but you'll see that the targets are getting hit a lot. Is basically sort of what I'm getting at here, right? As I pull these stocks up, SeaWorld, this is one that this is an interesting sort of case here too. You guys will remember way back here if you were watching the show that this was one that I sort of liked this chart pattern, basically because of the gap up, the little pullback and consolidation, and this trigger over here. There was a really the initial stop got calculated at like a really good spot that made total sense, right? So it was either going to start to move higher over here, or it was going to move into this gap and maybe close the gap or whatever. And so it just sort of made sense to me. Plus, I think I drew a trend line across these highs or whatever. But yeah, this is a really good example where everything worked like this, right? Hit the target relatively quickly and then pulled back a bit. And so, perfect example of why it's a good idea to peel some off at the target, right? Like say you entered back over here at $30 or somewhere around 30, it runs up to, 32, right? You got a decent gain there. And if you didn't take any this day, that it actually, closed this day at 32.01. So if you didn't take any profit at the target, you turn around the next day and oh boy, it's all the way back down here to just barely above your entry price. And so that particular day, you would have thought, oh man, I just made a huge mistake And of course, you can see what transpired subsequently. A couple days later, you'd have been thinking, "Ooh, that was a close call," but you just never know. I mean, I've seen them run up to the target, turn back around, and then hit the stop at barely break even. But the cool thing about this is the progression of the trailing stop, and you can see that after this pullback and sort of turnaround, that stop, kind of went below that, but more importantly, at that point, it was above the trigger price, so you were essentially at break even, right? There was two there was two trailing stop moves, and you were like 10 cents below the trigger here, and then of course you were 10 cents above the trigger here. So SeaWorld, not a huge high beta stock, right? You can see the increments if I zoom out like this are 25 cents. So anyway, current stop at 32.25, which is above the target, and so there you go. And so there's a lot you can glean from this. Like I was saying before, if you wanted to sell half at the target and then use the parabolic trailing stop at the other half, then you had a good gain in this, and it's already closed out, right? And so based on our system here, looks like, let's see, 32, 37. I mean, it looks like it's going to sort of drift back down, and it won't surprise me if it tags that target and closes today. Still with a nice gain. As long as the system trailing stop has moved above the target, then that's a pretty successful trade, I would say. So, yeah, the one that just triggered last night, Key. This is sort of it's a bank, right? Which is sort of interesting. Just came out with earnings, but if you look back at the longer term chart, you'll see that it's kind of breaking out of a base here, right? And so even though this stock gapped up, right, and this is one that triggered in the trigger price was 1760. The open price today was 18 bucks. You're talking 40 cents. Not a huge big deal. I mean, it looks like a lot when you're looking at this chart all zoomed in, but you back this thing out like this, it doesn't look like a big deal, and so it's kind of not a bad looking chart here. And the stock's really, I guess it's having a positive earnings reaction. I can tell you that because the stock is up a couple of percent here, kind of a low beta stock. So now let's see. I wanted to look at this WWD. This is an interesting one. Good looking chart, right? I mean, look at this uptrend that it has going here. And it kind of had a little bit of I don't know if I've drawn that correctly. So I was sort of aiming more for like a flat top breakout, right? Something similar to that. Really nice pop here, some consolidation, and then the trigger price, over here. But really nice sort of breakout here to a new high, and you can see that the stock's in a primary uptrend. But here's another good reason why taking some off the trigger makes sense. So you can see there was that big long range day yesterday that basically pushed through the trigger here. Yesterday's high was 119.20. And so you can see, today you got this little bit of a gap down, and sure, it could easily fade back down here a few bucks or whatever, and still be consistent with the pattern, right? It tends to like make higher highs and pull back, but another really good example of why pulling some off at the trigger price makes a lot of sense, because it's bird in the hand's worth two in the bush, right? And so if you sell a partial position at the target, then you're looking pretty good. So let's see. There's a couple other ones I wanted to look at here. I was talking about. I hadn't looked at this one yet. I was talking about semiconductor stocks, right? And so this one is extremely interesting because what you're looking at right here is you're looking at two trades in a row, right? back here at the beginning of June, triggered in right here, 2270, which would have been this day right here, June 4th, and had this run up to the target and a little bit of zigzagging around, and then the stop had come up here and got tagged right there, right? So decent, decent little trade if you took partial position at the target, and then maybe it faded down a little bit, and the second time it came up and hit the target, you thought, oh boy, I should probably, maybe I should take the rest off now that it's hit the target. But obviously what happened was it drifted down, just tagged the trailing stop there, and so that closed the position. So the position was closed there, and then like literally, week and a half later, it's back, right? These are kind of uh, weird days, weird bars right there where you get the big gap up in the red bar. But anyway, so there you go. So there was the second trade, right? Just like a week and a half after the first one closed, and so there you go. There's the day it closed above the trigger, and there was the initial stop, and then same sort of thing. Only this time it sort of blasted through the target, right? And look at it now. I mean, it's getting sort of a second wind. And so the idea is that, and this is exactly why we want to use the trailing stops to officially close the position. And so what you'll find is that a lot of times you can actually sort of do better than what is showing in the close trades. I mean, your results may be actually considerably better than what's showing in the closed trades, but the reason we do it like this is that some people may choose to, and it depends on how you want to sort of micromanage it. The more hands-off approach that you use, the more likely you are to be able to hang on for the big moves, right? And so if all you did was enter the day it closes above the trigger price, set your initial stop, follow the trailing stop, sell half at the target, and then follow the trailing stop, the T stop. That should say T stop. With the second half, sometimes it'll come down and do this, and so you got a decent profit on the first half. You get a little bit of profit on the second half because it does this, and then another time you'll be in for a much larger ride, right? And so that's sort of the principle of it working out over the series. After you've done 10, 20, 30 of these things, you most certainly will catch some of the really big runs, the big movers, and you may be in some of those positions for quite some time. And so again, you can look at the dates on the open trades, and so today's the 24th, and so we've still got this ARNA's been open since June 17th. Let's take a look at that. That's been open for a while, and so yeah, there you go. This is one where I've basically been sliding the T stop up rather than just marking all the increments. But yeah, this is kind of interesting. I mean, here's another example of trades in the swing trades in the same stock, right? We closed this one ahead of earnings back in May, and so the stock continued moving higher, and second trade here seems to be working out okay. It's gone up, and it's kind of stalled out the first time it hit the target, pulled back. And of course, days like this can be a function of the market itself, right? So we see these little pullbacks in the market. A lot of stocks, they have a kind of a nasty day. So this one sort of has a habit of running up and then having a big down day. But the trick is that the trailing stop was just far enough away, has been able to trail up dynamically, that it's basically kept you in this one. And so now it's sort of hanging around the target, and this trailing stop's pretty tight up here. So this thing's either going to continue, or it's going to tag that trailing stop. And another thing to keep in mind, especially if you're new here, is that these T stops literally move on a daily basis, right? So the only real sort of effort you got to put into it is to adjust the stop at your brokers basically every day. Now there will be cases where now here's another semiconductor on the open trades, Rambus. Almost forgot about this. So that's kind of interesting that there's so many. So it happens to be so many semiconductor related stocks that are on the open trades list right now. But so this one you can see a good progression of the trailing stops. So here's the thing: if like something like this, right? It goes into like a say a sideways sort of consolidation for a week. You may not see the trailing stop move. It's really going to depend on. I mean, it's going to sort of depend on the price and the time, right? Now you will see sometimes the initial stop will come up fairly quickly. But like I said, not always like within a couple of days. So sort of based on this price action here, the initial stop wouldn't have come up until like this pullback was over, and like once on this particular day there had been a little bit of a dip, and so the initial stop would have sort of, and this is kind of unusual because basically the trigger and the initial stop were sort of on this long range day here. So anyway, there you go. Another and these are the kind of stocks that I really like, that have the persistent uptrends. And again, you can sort of see that the trigger was sort of below the breakout, but it had a real nice sideways consolidation, and there you go. So well past the target here. I didn't look to see if this particular one. Oh yeah, it does. I haven't marked this on here, so I'll mark it right now. This has a parabolic stop now at 1265, right? And so that parabolic stop is starting to kick in, which basically tells you that it's a pretty big move right here, right? Like these few days here. And so let's see, that low is 1268, and so that P stop is starting to come in right here. And of course, this is all being 1265. This is all being calculated internally by the system. And it really makes a lot of sense you know to let the trailing stops sort of do their magic, because that's where the magic comes in. And it's not just, I mean, the trailing stops have all sorts of crazy logic in there, which I'm not even privy to the calculations. Not that I wouldn't know what they are, but I mean, it's a whole bunch of programmed in calculations and different things that make them dynamic. And so it's not even something that, I would care to understand. The idea is that in optimal cases, the trailing stop's going to sort of trail up just right, so that you don't get knocked out by normal fluctuation. Although sometimes there's abnormal fluctuation, and that will knock you out. I mean, there's a lot of stocks that I've seen, everything was going along swimmingly, and then all of a sudden you get like one crazy sort of day with a spike down that takes you out, and then the stock continues to go up. So that's just sort of the nature of the business, right? Got to have those stops in there. But so anyway, there you go. There's another good looking stock breaking out the new highs. And so the funny thing is that, no matter what you think the market's going to do, or what I think the market's going to do, um, this is sort of it's a mechanical system that you can just basically follow along with, and not have to sweat the small stuff, right? And so as you can see, it's going to work out over a series of trades. So longer you've been sort of following this, the better off you've been doing. So here's one. ENPH. This one's on the closed list. This was kind of an interesting one. It's a little bit of what I was talking about before. Is that day yesterday, all of a sudden, I mean, everything was just going along just fine, and then all of a sudden, yesterday, you get this huge long range day down. I didn't look to see what this was. It wasn't earnings. It had to have been some sort of news or something like that. I mean, I'm almost positive it wasn't earnings because we would have closed it. We would have closed it at the open ahead of earnings. So let's see. Let me go on my other. I just want to see because I'm curious. That was quite the sell down. ENPH. I'm gonna pull this up over at FinViz and see if I can see what the news was. So let's see. 723. Um, hmm. I mean, literally no news. No news that I can see. The only news from yesterday was something at Zacks. It says ENPH earnings expected to grow. What to know ahead of next week's release. And that was it. I mean, so there was actually no news that I can see anywhere. Now, I mean, there could have been something that's not showing up on here. Let's see, June. What was the date? No, July. I mean, there was no downgrades. There's like no news that actually hit the wire, and so that's just kind of that's kind of happens, I suppose you could say. But anyway, again, 1830 was the trigger, and so any way that you slice it, it hit the target, made a pretty good move through it. But this is just a case where you still made a decent profit, right? A buck 20 on the second half, and just one of those sort of unusual things where it just comes down and knocks you out. And so this thing could literally like turn back around here and keep going up. So you see a couple other times where it's done that, but so you just never know what can happen. Um, I wanted to look at this RNG. Yeah, this was another one that triggered, made a nice move up to the target, which was in the vicinity of a bunch of resistance up here, like these previous highs, and so you got this huge sort of resistance zone, and it ran up to there, and then just sort of stalled out. It's kind of fading back down, pulling back a little bit. So there you go. Yeah, it's interesting. JetBlue, that was another sort of. JetBlue was one that got closed ahead of earnings, right? I didn't mark it on here, but it was closed on 722, which was this day ahead of earnings. And this one's kind of interesting because I actually moved the trigger zone. I went ahead and extended that to the right because what I kept noticing on this particular stock was that it vacillated like several times here between the trigger and the target zone, which I thought was kind of interesting. But and so you can see this day, like the day when earnings were released, this stock literally like the high and the low were practically at the trigger price and at the target price like that particular day. And of course you can see the open and close right there, right? Opening, it gapped up, and then you had some crazy move. But that's a good reason why closing these stocks ahead of earnings makes sense, because you just can't. A lot of times you'll get a stock that releases earnings and you'll get a spike down like that, and it would stop you out, and then the stock turns back around and goes higher, or vice versa, right? Stock spikes up and then reverses, and so there's no edge whatsoever. Here's one that we didn't really talk about this, but this was like the only ETF I've seen in a while, and so this is kind of interesting. SSO, which is it's two times long the S&P, right? And you can see here that it triggered back here which was kind of, and then it had this gap up, which made it kind of weird. And so I'm not a huge fan of the leveraged ETFs, and that's why you don't see a whole bunch of them in here, is because they tend to be kind of gappy. And and then when you start getting into like the three times and all that, it just just really kind of gets it can get out of control, right? If we had this thing loaded up with like triple long and triple short every single sector, it would just be pandemonium. And so we basically kind of try and keep those out of here. So, but occasionally, you will see a sector and or an index ETF show up in here. Um, so, we've looked at a lot of these. Oh, I know what I want to look at is Roku, right? Because Roku, interestingly enough, has been really sort of a popular stock here lately, right? Like it had an interesting setup yesterday, and I saw a bunch of people that in the morning when it opened and it started pushing higher. I saw a lot of people that were thinking, boy, here we go. We're going to get another one of these long range days, because it was kind of a good setup, right? And it was a fake out, right? It was just kind of it was kind of interesting, but it was the big fake out, and so some people had to, it was been a good day to bail out of it if you were day trading it, which these people were. But anyway, long story short, another case of stock in a nice uptrend, real nice pullback, and this was a particularly interesting sort of pivot low reversal day right there. You don't see those type of pivot low reversal days all the time, where you're sort of in a downtrend and then you get that gap down and then reversal day. But that was basically it. And then you can see, literally, if I extended this over, you can kind of see where that trigger sort of made sense. And that's why we refer to them as like sort of, the price barrier, because basically it's a level of resistance that the price is going to need to get through in order to make the turn and go the other way. So if you look at the strategies page, like the help section, you'll see that what we're looking for is a stock that's in an uptrend, has a pullback, and then we're looking to get in as the trend resumes, as the primary trend resumes. This is a great example of it. And so that's why, getting in at the exact trigger price is not really a big deal, because as you can see here, the following day, well, it pushed through the trigger price, and then so the following day, then that would have been your entry price. And it was a couple of bucks, not quite a couple, but so the open was 97. So, well, yeah, it was. It was a couple of bucks higher than the actual trade barrier. In theory, and this is another thing where we sort of leave it flexible and open ended, is if you wanted to enter the day that it's breaking through the trigger, you could do that. But it's like super super aggressive, and I'll tell you why. Because we've seen plenty of times, and I don't necessarily advise that except under certain circumstances. And this may be, if you were watching this, maybe this particular stock was like really making a move. Maybe there was some news here or something like that. Pretty hot, well-known stock that people are trading. And so under a circumstance like that, you could have theoretically, if you're sitting in front of your screens. That's the other thing. We've made it flexible enough that even though everything's being driven by data in the back-end system, we've made the personal implementation of how you want to, trade these setups is open-ended. And so if you're kind of person that's sitting in front of the screens all day, you can take them on the day that they're pushing through the trigger. The only pitfall is going to be that there's going to be certain stocks that push through the trigger intraday and then reverse, don't close above the trigger, and so they're never going to show up on the open trades list. And so you kind of be flying on your own there, as far as like where to put the stops and where to have the target, all that good stuff, because it would not show up in the open trades, right? Anyway, Roku. Roku's still looking pretty good. I mean, it only took I mean, it literally hit the target within a couple of days. Here's the other thing I was going to mention. So, here's another little trick you can do is if if the trigger price is 95 and you're getting in at 97.50 or whatever, all you got to do is add the difference to the target. Simple as that, right? And so if you to make it simple, say you got in at 97, and so instead of making your target 104, you just add $2 to it and you make it 106, right? And so wouldn't have quite hit it until this day, but I don't think it would have been a big deal, right? So that's part of the idea. And again, some of you may want to wait for a close above the trigger and then just set a limit order right at the trigger price to get filled there. This is one where you would have not gotten filled on that, and so you just move on to the next one. And that's just sort of a matter of just how you want to implement it. And you could choose to like do it differently on different stocks, right? On certain stocks, you could say, hey, and we'll go back to AMD, right? I mean, AMD, super popular stock, um, trades, tens of millions of shares, average daily volume. Everybody knows it's sort of a bellwether of the semiconductors. And so, you could choose a little bit to trade a little bit different strategy on AMD than you would on something you'd never heard of, right? And so, it is what it is. But there's definitely a lot of flexibility as far as like what you would do here, right? A lot of flexibility, and most of the it seems like everything's working out pretty well here. I'm gonna say that like Jeffrey always says, the system is self-correcting. Oops, sorry, I bumped the microphone there. So here we are. Real quick look at the S&P, and then I'll wrap this up. This is Fed Day. So here we are. We've had a series. Actually, the S&P had a decent little dip here. This is a Fed day, right? That's a Fed day right there. We had a decent little 7% pullback into the beginning of June, and amazingly enough, I pointed this out. This pullback started on May 1st. The entire month of May was basically a pullback, and then the first trading day of June, right? 6/3 was first trading day of June. Boom, right back turned around, off to the races, right? And so there was a cup one, two. I don't even know if I'd call that one a pullback, but little dip, and then another little dip. So this is like the fourth little dip here. You can see that this is drawn sort of on the weekly chart. That's the big sort of overhead resistance line. And this is Fed Day, which is July 31st. And this is going to be, oh man, this is going to be a lot of drama here, because there's 100%, like the market has priced in 100% expectation of them cutting by at least a quarter point, right? And then I don't know the exact number on pricing in a half a point cut, and there's a few people out there saying that they might not cut, and so boy, the drama on this particular day is going to be and so that's next Wednesday, right? And so when I'm doing the show next Wednesday, let me look at my calendar. Yep, the 31st. That's going to be the day of the Fed announcement. In the morning, I'm going to say that the market might be extremely dull, right? Or, there may not be much going on when I'm doing the show. Obviously, there will probably be some opening positioning going on, but as it gets closer and closer to the Fed announcement, everybody's going to be on pins and needles. And then when the Fed, when they announced that they're cutting a quarter point is basically the expectation. If for some reason it's different, then you could see like a crazy market reaction, and it could be up or down. See, that's the whole thing about it, right? It could be a sell the news event, right? It could literally be a sell the news event. But anyway, so between now and then, you've got like this little sort of. I don't expect a whole lot to happen, right? We haven't had the market hasn't really had like a 1% daily move in like 20 something days. I remember reading that yesterday. So it's a little bit of a dull environment, but on a day-to-day basis, it seems like quite a few stocks have been doing really well, and then there's the occasional one that gets hit or whatever, and so basically the dynamic trailing stops as long as we've been in one. Here's this ARWR. Here's a good example. This is the biggest right now. This is the percent loser biggest percent loser on the open trades list, but I mean, you can't complain about too much about this because even though it's down 3.5% today, um, well above the target. And the thing that I didn't mark on here, which I probably should have, was that there's a at $29 there's a parabolic stop, right? And so that parabolic stop kicks in here, which is denoted in the system as the P stop, $29. And so that's pretty much, this is similar to what's been going on here lately. We've been getting some really nice, some nice moves, some nice follow through, and then even though a stock like this is theoretically would have taken you out at 29, based on the idea that the entry would have been around 27 a quarter here. Nothing wrong with that. That was a pretty good move, and so there you go. Current trailing stop on this is, let me verify, yeah, still way down here. And so situation like this, I'd be mostly inclined to be locking it in. I'll be honest with you. And so that's where a little bit of discretion comes in too. Let's see. Earnings on ARWR, they're not till 8/5, so there's a lot of time. So this could just be like sort of a normal pullback, and then this could still make a significant move ahead of earnings, but just sort of based on that move there, it was a very substantial March higher. I'd be looking to like protect the second half at target essentially. So, and last thing that I'm going to mention here is that theoretically, like this could be one of those cases where, like, if this stock tanked all the way back down to here, even though the trailing stop is above the trigger and it would have been a small gainer, in real life you'd look at this and you wouldn't want to let it come all the way down here and stop you out, right? And so that's why taking some off of the target makes sense. And then if you get a big push way above the target and you get that parabolic stop, it makes sense to take the other half off and just move on to the next one. So anyway, hey, thanks for tuning in, you guys. Appreciate you sitting around. I know there's some other stuff going on, lots of drama, and so just keep your eye on that. Keep your eye on that Fed meeting, the Fed announcement on the 31st, because that's going to really, really have an effect, I think, on what happens in the market. So, and the majority, I won't say the majority, but a lot of these trades are going to get closed prior to that, and so that's sort of everything's going to get trimmed down, and then basically like a new cycle will begin as we get towards the tail end of earnings season. A whole new cycle will begin. That's always fun. So anyway, thanks for tuning in. I'll see you guys here next week.